Managerial Accounting. In this video, I'm going to go over how to do a problem where you're defining the benefits of setting cost standards and calculating materials and labor variances. At this point in time, this will be my third video in this area. And the reason being is that this is a very difficult area for students. So again, I'm going to break down this problem for you. So the first question they're asking is, what are the benefits of setting cost standards? Okay, there's a lot of benefits. The first benefit is it's going to lower accounting costs. So accountants come up with the standards, however, they do not do it alone. They're going to work with the human resource department to look at hourly rates. They're going to work with the production manager to look at efficiency standards. They're going to work with the purchasing manager to look at direct materials, what the standard is for that area. Another way that it's going to help is to identify performance standards. So they're going to look and make decisions, managers, off of those performance standards. Are they efficient with materials? Are they hiring the right people? It's also going to help them set the sales price for inventory. It's going to help come up with that price that they need to sell that inventory for. It's going to help with the master budget preparation. It will help set targets for flexible budget performance. So many different areas is going to be used to analyze these budget variances. All right, so here's the problem. It says calculate the direct materials cost variance and the direct materials efficiency variance, as well as the direct labor cost and efficiency variances. These problems can be daunting to students if you're not understanding what the question is asking, okay? So the first thing that I like to do is I like to break out my actual and my standards. Okay, so over here, I've started the direct materials standard and I've started the direct labor standard. So now I'm going to go back into the problem and I want to get the numbers that are related to standards, okay? All right, so the standard quantity of direct materials are 3 yards, okay? So 3 yards of cloth. So I'm going to go over here, and that is my per unit, 3 yards. Okay? All right, so now I'm going to input my numbers. The next thing I want to find out is the actual numbers produced, actual units produced, okay? So the actual units, I go back in the problem, they produced 1,000 units of the company's product. That will be my actual for units, 1,000. Okay, so now to get my standard yards, I'm going to take 3 yards and I'm going to multiply that by 1,000. And that gives me 3,000 standard yards. Again, everyone, this is not looking at cost, not yet, okay? We're trying to come up with the standard quantity, okay? All right, so now that was my direct materials. Now I'm going to go back to the problem and I'm going to look for my direct labor hours. This is not the rate per hour, this is the number of hours. So here's what it says. The standard time was 2 direct labor hours. So I go over here, here's my per unit, 2 direct labor hours. Okay, so I'm going to put the number 2 and I multiply it again by the actual units produced, 1,000, and that's going to give me 2,000 standard direct labor hour. Okay? All right, I'm going to use those later on. Get in the habit when you do those problems, break this down first. Okay? All right, so now I go back to the problem and I'm going to work. So notice over here that I like to use this equation. I talked to you on a later video about that, but I'm going to bring it up again because it is difficult. All right, to get my cost variance, it will always be this equation across. To get my cost variance though, I'm only going to look at my actual cost, compare that to my standard cost, and then I'll multiply everything by the actual quantity. Okay? All right. Guess what? I can see right here, just seeing if you're paying attention. All right? So here's how I can tell. My far left-hand side is always actual. My far right-hand side is always standard. The middle is a little of both. So it's standard cost times actual quantity. So my cost variance, I'm going to work right from here. So let me draw an arrow, and I'm going to recopy it. It's going to be actual cost minus standard cost. Now this is only looking at cost. I'm going to multiply everything by these two, actual quantity. All right, now I just input my numbers. I go in, what was the actual cost? Okay, the accounting records show that 2,500 yards were used and the company paid $1.40. That's actual. So I go over here, my actual cost is $1.40. I subtract out my standard cost. My standard cost, again, I get right from the problem. The standard cost was $1.35. Okay, remember the last video I taught you to eye this? We thought the cost was going to be $1.35. Guess what? It was more. Not good. That's going to be unfavorable, my final answer. And then I just multiply this by the actual quantity. So the actual quantity was 2,500 yards. It tells you that right in the problem. I multiply this out, all right, ends up being 5 cents times 2,500. Okay, my final answer is 125, but a big U, unfavorable. My cost ended up being more than my standard, my actual cost. Okay, so now I'm going to calculate my direct materials efficiency variance. And remember, the efficiency is right here. So I'm going to recopy the equation. All right, so what's the only difference is the actual quantity compared to the standard quantity. I rewrite it, actual quantity minus standard quantity. Put that in parentheses, multiply that by what's the difference? The standard cost, okay? I input my numbers. The actual quantity was 2,500 yards. That said that right in the problem. The standard quantity we figured out. We figured that over here, 3,000. Okay, I have my parentheses times the standard cost. The standard cost is $1.35. Again, stop and eye it. Don't make favorable or unfavorable hard. 2,500. I estimated that the materials that I would use were 3,000. Well, guess what? I only used 2,500. That's good. So my final answer will be favorable. So I just take the difference, which is 500 times $1.35, and that equals 675, but that's favorable. Remember, it will mark you wrong even if you figure out the correct answer. You have to say whether it's favorable or unfavorable. Okay. Now we're going to do the direct labor cost variance. Again, I'm going to work right from here. So I've got my actual cost minus my standard cost. Then I multiply it by the actual quantity. Okay, so the actual quantity will be my actual hours. All right, so I go back to the problem. What did they say? They said that the actual number of hours worked were 1,700 and they were paid $9.50 an hour. That is your actual number. So the individual amount per hour is $9.50. I subtract out I look back in the problem, how many hours what was the pay rate? The standard time was $10, okay? So I go over here, the standard hours, the per rate. Well, guess what? My actual is $9.50. That's what I was anticipating paying my employees. My standard was $10. Well, guess what? I ended up paying less, so my final answer will be favorable. This is good. All right, so now I multiply it, and the actual quantity tells you right in the problem was 1,700. That's the number of hours. I multiply it out, and that gives me 850. But remember, that's favorable. My actual was less than my standard. Now I'm going to calculate the direct labor efficiency. I work right from here. Okay, I'm going to rewrite it. So I have my actual quantity minus my standard quantity. And I'm going to multiply all this by my standard cost. Okay? All right, so I look in the problem. My actual quantity, it tells me right in the problem, actual quantity, actual number of hours was 1,700. The standard direct labor hours, we figured that in the beginning. We figured 2,000. Well, guess what? That's good, right? We worked less than what we thought. So we were more efficient with our production. So our final answer will be favorable. I subtract these, okay, and then I multiply it by the standard cost, and the standard cost is $10, okay, and that equals $3,000, but that is favorable, okay? All right, so that's how you do that problem. I wanted to show you that because it's thrown a lot of different numbers at you. Break it down. If it's asking you for the direct materials cost variance, your equation will be completely different than if it's asking you for the direct labor efficiency variance. So make sure you're understanding the different equations. And that's it. I will see you soon. All right.